Well, thank you for staying with us. We expand that conversation when it comes to traders in the Central Business District from Abasuakai who are dealing with spare parts to the major hubs in Accra who have shut down their shops. This is day 2. What is day 2 going to look like? How is it going to shape up? And can the business people who have shut down their shops, can they sustain this? This morning, we're joined by Dr. Joseph Obeng, who is GUTA president. We also have Dr. John Osai-Kwapong, a CDD fellow, and Dr. Theo Echampong, a finance analyst. Gentlemen, a very good morning to all of you.
Good morning.
I'll start with you, Dr. Obeng, especially as just a few days ago you were talking about the powers vested in you by the business community and declaring that sit down of your membership. How would you assess day 1 of this, shutting down of shops?
Yeah, thank you very much. I hope you agree with me that at this time with economic hardship like this, if just one person is able to close his shop, even for a half a day, you know that the person had endured a lot. But to come to think of the mass of people who close their shops, then it tells you how serious people are with the issues that are going on. And so your own assessment is as good as mine. For people by their own selves, it's not any imposition from the leadership of GUTA. They themselves told us that they want to show to government that we are indeed in trouble, serious trouble. And that's what they are doing. And they gave themselves the timelines. And so whatever you saw is as a result of the resolve that the people, our members themselves have. So I would say that it's okay. In any situation like this, even during public holidays, we have some people who still go and open their shops. Even Christmas Day, some people do that. So when we are doing some of this exercise, we give about 10% non-compliant or some of sorts. So that is okay. That's okay.
What would you say were the benefits of yesterday's exercise?
Yeah, we made a statement. And we are continuing making a statement to the effect that our capitals are being eroded. And all that we are communicating to government is that there should be a sense of urgency in what is happening. That's the main thing. And then we are communicating to our traders, our customers, consumers,
right,
that we are not the cause of the price hikes in the country. We want to take ourselves from that. Because the business that we do not do it in isolation. We do it with our consumers. Then we are also trying to achieve a purpose to serve a signal to our suppliers who give us credit that we are not being able to service our indebtedness to them in time as we normally do because we have a peculiar problem as a nation. So this is what the exercise or the closure seek to achieve.
Finally, with you, before I just for the initial comments, before I move on to my other guests, I'd just like to find out, like you rightly mentioned, a few of your members disobeyed. Yesterday in Abasuakai, the spare parts dealership, it was literally a ghost town. I could say from what we saw as my colleague Samuel Kojo-Brace brought us the scoop, 99% of them had shut down. But there was this gentleman, one outfit where he said that, look, the times are hard, my family is struggling, my children have to go to school soon, and I am not that open, so to speak, but I am here. If someone passes by and needs something, I will sell to him or her. In advance of that, we had seen the Traders Advocacy Group Ghana say that, look, it may not be the best of times to shut down shops. We interacted with a few people in the Central Business District who said that we could have done this not with shutting shops, but by wearing, red armbands, headbands, and all of that to show dissatisfaction. Would that not be enough? Are you willing to bend a bit when it comes to this shutdown of shops?
Yeah, everybody have his own view or opinion to this. Those who have closed their shops say that we have to make a firm decision to communicate to the government. Because if you do not let them know how serious and the extent of our suffering by doing something that will let them feel the pinch, then we will be joking just by putting things on our head and all that. So those people have done this. And those who also indicate that the times are very hard to the extent that I cannot even afford half of a day and all that. Yeah, everybody has his own right, isn't it? So that's what I can say to that. But this thing is coming from the people themselves, and then they are resolved to make sure that the problem is solved, and not solved for themselves, but solved for the consuming public and for Ghanaians at large. So it's not a selfish thing that they are doing, that somebody will, at these hard times, close the shop. Again, you are in a hard times, your capital is eroding, and you are again close your shop. It means that the intensity and the plight of the people is just serious. Mm-hmm.
All right. Do hold for me. Let me bring in CDD fellow Dr. John Osai Kwapong. So I'm sure you followed. You know exactly why the traders are up in arms, shutting their shops. A few days ago, when I had to make a transaction, and this was Sunday, just over the weekend, the dollar was sold for 12 cedis and 50 pesos. Now, in some places, it's sold for 13 cedis and 50 pesos. That's an increment of 1 cedi in just how many days? In 5 days, or 4. Then there's Dr. Obeng, who was just speaking, in announcing the shutdown of shops, also made mention of the interest rate. And you know that it has been hiked. At the start of the year, it hovered around 22%. Now, it's around 38%, almost twice that figure. Were these traders justified in shutting down their shops on the basis of these economic metrics?
Good morning again. Yes. From what I listened to Dr. Obeng speak about and other things that I've read in media reports, you can understand the pinch points that these traders are facing, right? That the two key things that are critical to their business, right? Which, one of them being, access to credit, and the rates which they are paying for those access to credit is really squeezing them. That they need to find a way to respond to prevailing economic circumstances. And for them, I'm sure if they look at the trade-off between, closing my shop and trying to stay open and do business under these very challenging circumstances, the trade-off is I am, quote unquote, better off trying, not even opening at all. So on that basis, knowing the pinch points that they themselves feel, there is justification for their response. I think the other side of the equation is that then those actions also have other ripple effects on the economy, right? So you think about your everyday consumers who now cannot have access to those goods and services that they provide. That's another aspect of it. Shutting down and quote unquote not doing business also then means that besides they not generating revenue, the ability of the government to also take their cut from the revenue that they generate via taxes is also slowed down. So it ends up having a ripple effect on all aspects of the economy, whether it's other traders or other businesses that rely on them for goods and services, its impact on government's ability to raise revenue in an already tight fiscal space and difficult circumstances. But the bottom line is, they feel the pinch points, and as they weigh their options in terms of how they feel those pinch points, for now they feel, look, we are better off just even closing our shops and stay home. And
so for you, Dr. Kwapong, you don't fault them. You don't fault them.
No, I don't. I really don't fault them. I mean, I understand why they would, but again, I'm just concerned about the ripple effects on the other sectors of the economy. But I do understand why they would respond that way.
I do hold for me. I'll come back to both of you, gentlemen. Let me also bring in Dr. Theo Champong. Doc, so looking at everything we're discussing, it's interesting because only yesterday I went somewhere and an educationist or educationalist was purchasing mathematical sets, quite a number of them. She went to market on Tuesday and the price she got was 25 cedis. On Thursday, in fact, on Wednesday, which was yesterday, when she went, so this was midday Tuesday when she made the inquiry. By Wednesday, before midday, when she went back, the price of each mathematical set had gone up by 5 cedis. So what she had been told was 25 cedis on Tuesday was all of a sudden 30 cedis on Wednesday. And that is, it paints a picture of what the traders have to go through and what purchasers have to go through, because they were, if that person had prepared exactly 25 cedis for, let's say, 100 mathematical sets, she would have to come up with 5 cedis times 100, which would be what? 500 cedis extra just to purchase that. That is what the end users, the traders have to deal with. So what is your take? Do you agree with this sit-down action?
Good morning. Look, everybody is feeling the pinch, as you rightly pointed out. And for GUTA to actually exercise what I would call a nuclear option tells you that, they've gotten to the point, really, that their very business and the viability of the business is at stake. Because these are people who are making a trade. So ordinarily, nobody wants to close their shop. Ordinarily, they want to continue doing their trade. They want to be able to generate then cash flow to sustain their business and also to sustain their families. So to get to the point where an organization and a business group as big as GUTA and its members decide that we're going to lay down our tools tells you that they have been pushed to an extreme corner where the very businesses that they run are at stake and the survival of it. So that's how I read it in that sense, because you rightly pointed out many of these goods, because we don't necessarily manufacture them in Ghana, are imported from outside, right? Even the math set example that you gave, I don't know, and I'm not sure that we even produce math set in Ghana, probably imported from China, right?
Right.
So in that regard, if you're having to deal with 37% inflation, if you're having to deal with over 40% depreciation of the CD to the dollar, and then you're having to deal with all the extra tax demands, right, that come from the authorities, then, I mean, there's no way that the business would more or less survive. And,
right.
And what it then means is that even if you have to go and bring the goods in, you would have to pass on the cost to the consumers. And the worry then now is with the shops now also closed, the very services and goods that people need, they may not even be able to access it. So that then can even have an additional unintended consequence of further driving prices much higher just because you don't have access to those goods. So I don't fault GUTA. They are doing, as a business group, they are doing what they deem is best in their interest. And it is the economic conditions that has forced them to pretty much, exercise this nuclear option.
Dr. Bing, so Dr. Champong talks about this being, a nuclear option, worst case scenario. I don't recall the last time I saw such, an intervention by GUTA. This means matters have come to a head. But are you also taking stock of the consequences on the ordinary people who come to town to make all these purchases? It also means that they're going to be affected. So you are affected, but are you considering what this means for people who also come to purchase the day-to-day items for which, those shops are known, which now have been shut? Are you considering that?
We have direct interactions with them. First, we were managing frustrations with them. They will come and the price have gone up, then they will talk and then they buy. They will talk and then they will buy. Now the frustration is turning into anger. They will come maybe 3 weeks ago or a month ago to have come for a pro forma invoice. When they are coming to buy the goods, maybe the pro forma invoice was 10,000 Ghana cedis. When they come 3 weeks on, the price have doubled to 20,000 Ghana cedis. At this stage, what we have started noticing from our consumers is that they express anger rather than frustration. And so we are giving this out as a security matter because it has reached a point that they cannot contain. It's becoming unbearable for them. So this thing that we are doing for this same reason, their frustration that they cannot bear the prices. Because if they are unable to buy, and as a matter of fact, because of the rate of inflation, our customers are unable to buy the quantities that they used to buy with the same amount of money before this time. And so it has also reduced our turnover. And when our turnover is curtailed, it means that we are unable to service our local debts and external debts. So it's something that we are doing together. Because don't also forget that we are also consumers. Because if I sell electrical goods, I'm a consumer of food products. I'm a consumer of pharmaceutical products. So there's no group of traders somewhere and then consumers somewhere. We are in it together, seriously. So we are doing it for the better cause of the whole nation, that we are able to stabilize the currency, we are able to manage inflation, we are able to reduce interest rate so that prices of goods and services will reverse a little. Not even if it is not reversing, will stabilize so that people can have the respite to live peacefully in their country. Don't forget that price hikes and all that is also an issue of security. If we get to a point that they can't, as I've told you, now the frustration is turning into anger. If you are a store person and you face these people all the time, I can imagine you yourself having been frustrated to a certain point when maybe something that you knew that it costed so much have changed drastically.
Right.
And so even you who might have it, and then the one that do not have. So that's the extent of suffering that we are expressing. And it's not out of malice. Sometimes we say that these things are global effects. But this global thing that we talk about, we also see countries like America, France, Italy, all of them also going on demonstration to express the extent of their suffering. Right. And we are not to be left out because we are also human beings who have our feelings.
Tell me, though, I want you to weigh these two things and tell me where we can find middle ground moving forward. So fuel prices are up in some instances by about 2 cedis. And I know because of, the fuel I purchased to, move my car. Then the cedi continues to slump. I was just making mention of how much it has depreciated just within less than a week. It's now the worst currency in the world. That is one end. But on the other end, inflation, for example, Johns Hopkins professor of economics, Professor Steve Hank, has always said that, our inflationary levels are higher than what we already know. Currently, he pegs them at over 90%, somewhere around 100%. The Ghana Statistical Service has come to say that the parameters he uses are not the same ones they use, and that our inflation, the rate 37.2%, is a fair reflection of what indeed we have. We've seen a presidential staffer, Owusu Bempah, come out to say that our currency actually is the third best on the continent, just behind the Tunisian dinar and the Libyan dinar. How do you weigh these two? Aren't you making a mountain out of a molehill? Aren't you overdoing it as GUTA?
No, we have a problem at hand and nobody should downplay it. It will help us. Let's find a pragmatic solution to solve this. For Bank of Ghana, I'm very surprised or disappointed in the way they see inflation. Because the inflation that we have here is as a result of accumulation of cost and nothing else. Today, you are telling me the increase of petroleum products. From the time that we buy the goods from outside, the world commodity prices have changed. Freight charges have changed. Duty prices that we pay here have gone up. The exchange rate is taking a chunk of this price hikes, and the VAT that used to be flat rate 3% have now metamorphosed into standard rate, and we are paying 19.25, an increment of about 16%. And then Bank of Ghana keep on increasing the monetary policy rate, thinking that the problem of inflation is as a result of so much money supply chasing fewer goods. But that is not the case, because we have so much goods in the system. And we cannot say that there's so much money chasing it. This is the elementary theory of inflation. But ours is a cost push inflation. So when he keep on increasing the monetary policy rate, he only go to compound the situation. You see, sometimes when he said that we use the food basket, or what are the indices that you use,
right,
mainly being food products, you think that whatever is imported is not affecting the food products, because that one is grown locally. Now, everything that the farmer uses, the farmer is also a business person. The farmer buys insecticides.
So there are inputs, agricultural inputs.
We decide agricultural inputs and all that. He buys everything. And all these prices have gone up astronomically high. You are just telling me about increase in petroleum products. Does it go to these food items? So our problem is primarily on the accumulation of cost and vice versa. And so what are we doing to safeguard some of the cost? For some of them are simply doable, because VAT itself, the flat rate, we are paying flat rate 3% for 5 years, and we are still getting our revenue targets. Now that we change it, it has pushed inflation by 16%. And so these are the things that Bank of Ghana should be looking, and then managing the exchange rate well.
Okay.
If the exchange rate is not stabilized, if you are not able to stabilize the currency, our cedi, then prices will definitely go up. And so when you increase the monetary policy rate to increase the lending rate, you are only compounding the problem. And so we'll be in a problem in perpetuity. This is how serious the whole thing is.
That's how serious the situation is. Let me bring in Dr. John Osai Kwapong. So when you look at the myriad challenges we're considering, investment policies, high taxes, a bleeding currency, which now is ranked the worst in the world, and all the other dynamics that we're talking about. Dr. Obeng was just talking about agricultural inputs and the rest. Has government done enough to stem the tide of the economic downturn and also mitigate the bite of same on ordinary business people? You heard Dr. Obeng pointing to the Bank of Ghana, the central bank. What is your take?
So at this point, I also don't know what other options the government can exercise. And I say that because, I mean, from the Bank of Ghana standpoint, from the central bank standpoint, the concern about inflation has been, pushing them to use the monetary policy rate to try and deal with that. But you still see inflation going up, month to month whenever it is reported. So that's one part of it. If you look at the currency, for me, I think the exchange rate really does boil down to a pure economic issue of demand and supply. The thing that I've been curious about is sometimes when there's an expected inflow of dollars into the system, it does tame the exchange rate a little bit. I remember, I think maybe it's been a month or 2 months ago, there was I think a $750 million.
The Afrexim Bank facility, right.
I think it was from the African Development Bank or something, right? That didn't seem to move the currency market in terms of taming it down. The other thing that sometimes happens around October when the cocoa season is opened is the cocoa syndicated loan. And usually once that loan is secured and the inflows come in, it has a way of taming the exchange rate. I know they've been successful in raising that. I think it's 1.1 or 1.2 billion.
1.2 billion,
but at
thereabouts.
the same time, right? But again, you still don't see that slowing the depreciation. So that also doesn't seem to be, quote unquote, doing the trick. So at this point, and yesterday I was having a conversation with a colleague where I said, well, perhaps at this point, it's either we are riding out the storm until we are able to secure a deal, a bailout with the IMF as the option that we are looking to, because I don't see any quote unquote good options on the table for the government at the moment, besides being able to secure the bailout deal with the IMF, depending on what the package contains, and then you would have to see how that helps stem the situation in which we are. I mean, GUTA, Dr. Obeng was talking about, his members, for example, talk about high interest rates, high taxes. But given the situation in which the government is in terms of the fiscal challenges it's facing, I just don't see how the government can also say one of the policy tools we are going to exercise is to make some adjustment to taxes and try and cut taxes. I mean, they're already in a difficult revenue situation, so I don't see them exercising options that makes it even more difficult for them to raise the very little revenue that they need to be able to run government business. The expenditure side, yes, but then if you also think of the expenditure side, at least when you look at our budget structure, the expenditure side is predominantly wages and salaries and then interest on the debt. Right. So even if you decide that you would halt all discretionary spending by government on key government programs, it still won't make the kind of debt, the kind of dent that you want to see in terms of taming expenditure. So there are no good options at this moment. There are only difficult options.
But maybe government should also take the nuclear option, maybe.
Right, but you also have to think of the political consequences of the nuclear option, right? Because when citizens are feeling pinch points and you take a nuclear option of really trying to rummage through your budget, control spending, do all kinds of difficult decisions, it also has an impact. So there are also trade-offs. I think ultimately at this point, my thinking is it looks like the approach is ride the storm. Eventually, we would secure a bailout with the IMF. Hopefully, it will be a good package, and hopefully, it would be able to address, the pinch points that we are facing.
Let me bring in Dr. Achampong. So what is your quick thinking on what the economic watchers within the government setup, including the Bank of Ghana, have done? Have they done enough? I mean, beyond hiking the monetary policy rate, which has been done time and again now, which doesn't seem to be yielding the results that we want, there's also the IMF program. And interestingly, the IMF is saying we must show debt sustainability to get a deal. That's the latest front. And we also know that the IMF is precluded from giving us a bailout if we are not debt sustainable. So marrying these two, what should we anticipate? What can we do?
Yeah, sorry. The debt issues are fiscal issues. The Bank of Ghana issues are monetary in nature. But I've always said that a wrong diagnosis of the problem would give you a wrong solution.
Have we wrongly diagnosed the problem so far?
I think when it comes to the inflation issue, the whole inflation targeting approach, especially in an economy which is over 80% informal, the data or the evidence is out there that it's not working. Hence why you see the rates much higher. The inflation is still, last reading was 37 point something percent.
37.2.
The central bank is had to hike up rates all the way up to 24.5%. But there's a limit to which you can actually hike up this rate without, having or without it killing off the growth of the economy itself. And if you look at the data, if you look at what the central bank has been doing over the years, basically that inflation targeting approach hasn't worked. If it did and if it was working, then it meant that then inflation should have been coming down, because the inflation that we're feeling now, and Dr. Bin rightly hinted at it, is actually not a demand-driven inflation. It's a supply-side issue where you've got the cost pressures at a global level, but also at a local level, filtering through to the prices of goods and services. And to that extent, you don't also necessarily then blame citizens when, if you have 37% or so inflation, the people are rational. So they would want to then have the safety of wanting to either buy dollars to save or buy dollars, more or less to keep the value of the investments that they have. And that then drives a lot of the pressure that we're seeing on the market in terms of the demands for dollars and the subsequent impact of that on the exchange rate itself, and then also, of course, the pass-through effect of that on inflation itself. So I think the Bank of Ghana has done its bit, and probably it's at its wit's end in terms of what it can actually throw in to fight the problem. Because the problem that we're dealing with is largely not a monetary problem. We've got a bigger issue on the fiscal side, and that is where we, or some of us, think that the IMF program and that whole arrangement around that is really fundamental to any sort of medium to long-term recovery of the Ghanaian economy. And it's all contingent now on the debt sustainability analysis that the fund, does. I think the fund will finish, or probably just about concluding that DSA, and bits of it would feed through into the 2023 budget that would be read probably in about a month's time. So really, we probably will have to still ride out the storm until about a month or so from now, when the budget is read, and the budget will give us an indication as to, one, where the debt trajectory is heading. Number two, what that then would mean for the IMF program itself. And then number three, whether or not that then sends any signal in terms of the policies that the government wants to pursue for the next sort of fiscal year. I think that is really the biggest signal that many people or many market watchers are waiting for when it comes to how we ride out this storm going forward. But fundamentally, the problem that we have is not a monetary problem. We've got a bigger issue with outside of the equation.
All right. Hold for me. Before we proffer solutions briefly, and then that's how we'll cap off the conversation, I just want to go back to Dr. Kwapong. As far as the IMF component is concerned, what are your expectations between now and the end of the year? A reminder that my interaction with the IMF boss, she said back then, and this was in sometime, early October, that they would do everything possible to get us a deal by close of year. The economists are saying even that is impractical. It is not likely. We have debt sustainability issues to deal with as well. Looking at the different permutations, what are your expectations? Briefly on that, so we can get to solutions moving forward.
Sure. I mean, I really hope that a deal can be struck sooner rather than later, right? Which is from what you gathered, hopefully by the end of the year, because this is not the kind of situation we are in is not the sort of situation that we can just keep hoping that we can ride out the storm without some major intervention. Whatever the issues are, whatever the difficult negotiating points are, I'm hoping that between the government negotiators and the IMF, that sooner rather than later, an acceptable plan will be agreed upon so that it can be signed off and rolled out. Because these things also take time, to be implemented, to make sure that it starts having an effect. And I think the sooner that such a deal can be agreed upon and rolled out, the better it would be for all of us. So I'm just hoping that whatever the difficult points of negotiations are, eventually they'll be able to get through and secure a deal.
All right, gentlemen, so we're moving towards the solutions, but I'll start with Dr. Obeng. Thank you so much for staying with us. First off, just very briefly on this, I want to find out, you're shutting shops all the way till Monday. You saw what happened on day one, and some are already protesting this shutdown of shops, your membership. Can this be sustained till Monday?
It depends on the membership.
Okay.
And they have their rights, as long as it will take them. Yeah. So
you will listen to membership. If membership says, let's bring this action to an end, you will declare that.
Everything is on the membership. I do not have control over them. It's something that they are feeling the pinch and then they want to express it. It's like somebody's son or mother are dead and the person wanting to cry. You allow the person to cry out. It's a frustration, it's anger. And so it's a therapy in itself. It's a therapy. I see it as a therapy. And so as long as it will take them, we leave them. And then, because most of them are also pondering about how they should go forward, how they should revise their prices. And so there are so many things that they will be doing whilst they are in the houses. So they will reflect over what has happened, the price changes, how they will amend their price, how they are going to strategize so that they will be able to weather the storm.
So this also means that even if members decide this could be extended even beyond Monday, that is also a possibility.
No, the times are so hard, and they decided their date due to their strength. And we are making a statement. We would have made that statement enough, at that time.
All right. So a quick one as well. I heard some of your members yesterday express the sentiments that sometimes when these actions are taken, it's all about you, the leadership, those at the helm of affairs, and that it's not really about members and what they decide, and that sometimes there is some politics at play. Is there any politics ever at play at your level when these decisions are made?
You've been observing me probably for a longer time. I'm very principled. GUTA is non-political. That's why most times you see that our detractors, sometimes they will say that we are NDC, and some other times they say that we are MPP and all that. It means that we are just so focused on our business. That's the paramount thing for us. And our slogan is GUTA, then they will say our business, GUTA, our business, GUTA, our business. We say it 3 times. So we are just focused on our business. There are serious business people in our midst.
Right.
Most of them are older than us. Some of them very, very successful and all that, and they are not to be toyed with.
Okay.
And we sometimes they are so bigger than ourselves that we cannot play with their intelligence and all that.
Okay. So it's all about
people, very elderly people, and so everybody can attest. Those in government and those in the opposition who know our principles. Because if you do well, we praise you. If your policy doesn't help, we say so. We talk to the issues, and that's why we've been very consistent. Look, if you come to the marketplace, there are so many. We are all elderly people, and there are so many people with other political backgrounds, and so how can we tell people with different political backgrounds, whilst they know that some of these actions will affect one way or the other, and then they will abide by that? Elderly people, nobody should think in that angle. It's not even possible for us to do that. It's not possible.
All right. So let's do this, gentlemen. I'm going to give 30 seconds each. Please try to work within that time. Dr. Obeng, I'll start with you. 30 seconds. What's the way forward? What's the way out of this? 30 seconds.
Yeah, I think government should articulate its policy outline regarding this situation, and then give the timelines, and then also let us know, the citizens alike, business community alike, all of us, our play to role. When this happens, then we know that we have a program that we're dealing with. But if it is so empty, then speculation, get rife and all that. Let's put the timeline, this is what we are doing around this time, this is going to be done and all that. Let's articulate it very well to be policy, our role to be done as even traders, the role that the industry, AGI and all that should do and all that. Let's spell these things out. They say that this is how we have a challenge, a big challenge in our country, and this is how we all want to go. I think we need such a thing as soon as possible.
All right. Dr. Joseph Obeng, we're very grateful that you took the time to join us this morning. Thank you so much for your time, sir. Dr. Obeng is president of GUTA. Now, Dr. Kwapong and Dr. Echampong, do stay with me, because even after this conversation, we would like your widow's mite contribution towards what our negotiations have been like with the IMF so far. My colleague George Weafe has been in Washington, D.C. following those interactions. So we'll have you stay on even after this conversation, and after we take the break, we'll be delving into that. So do hold for me. But your 30-second remarks on this one as we move forward. Quick thoughts. I'll start with you, Dr. Kwapong.
Well, there seems to be a policy signal vacuum from the government in terms of how are we actually going to address the current difficult situation. Dr. Theo Achampong mentioned that hopefully, the budget should be, the 2023 budget should be read in about a month's time. I'm hoping that between now and then, we will be able to see some very direct policy signals from the government in terms of exactly how it plans to address some of these key challenges. Hopefully that would, calm the waters a bit and send positive signals to investors and other key stakeholders in the economy. But at this point, there's a vacuum, and I think that vacuum must be filled sooner rather than later.
Thank you so much. Just hold for us. Don't you go away. Dr. Champong?
Yeah, it's about the credibility of government policies and the signaling effect that John talks about. And to that extent, I would expect a couple more direct engagements by the finance minister, by other government functionaries. Just be candid on what they're doing and how they intend going about it. And the biggest one, of course, will be the 2023 budget, and to what extent, if any, that would be deemed as being credible by the markets.
Gentlemen, thank you so much. I do hold for us, Dr. Champong, as well, as we return to have that conversation, broader conversation on the IMF, our negotiations with that outfit so far, and what the temperature is looking like, what the gauge is looking like moving forward. Will we get a deal? Will we not get a deal? What are the exigencies to take stock of? But we've been joined for this particular conversation by Dr. Joseph Obeng, President of GUTA, Dr. John Osai-Kwapong, a CDD Fellow, and Dr. Theo Champong, an economic risk analyst. Stay with us. When we return after the break, we find out about the IMF and what our expectations can be as a people in that regard. Do stay. We'll be right back.